Well, let's talk about markets, all of them, tariffs, the Fed, and much more with Greg Fleming, President and CEO of Rockefeller Capital Management. Rockefeller. There got to be a lot of money there at this point. Right, Greg?
It's also an incredible name.
No, I know. Broad shoulders, though. You got a lot of responsibility.
Yes.
Former president of Morgan Stanley Wealth Management. You were huge at Merrill and played a big role in maybe salvaging what was left of Merrill in 2008. Now it's flourishing again. So
yes.
You've had
a great deal for Bank of America. Looking back,
great deal for Bank of America. You have a storied career and probably know how to analyze this stuff as well as anyone. Are you?
Thank you.
You feeling good?
Yes, I'm feeling generally good. I think what the American economy has shown in the last 3 or 4 months, the word I'm using is resilience. There's still a tremendous amount of resilience across the economy. There has been a lot of uncertainty, and there remains some uncertainty. Some of that has settled, and markets have reacted to that. But I think the economy is still hanging in there.
There's tailwinds. There's a headwind, but if you were doing a Ben Franklin close, you know how to do that? Pros and cons. Yeah. You add them up and decide how to make a decision. Ben Franklin was pretty smart.
Very smart.
Very smart.
Many great quotations he had. Yes.
He did. So now, even with the bill that was just passed, companies know tax rates are not going up. They know they can do 100% expensing of equipment.
That's a big thing.
I can give you a lot more if you want. Yeah. There's deregulation. There's
AI. You and I have talked about AI. You heard about Grok last night.
Well, I don't. Grok. I can't get the real story on Grok.
The 44% on that test that they built,
right?
Which was more than they were even anticipating.
So, how the tariffs right now? August 1st, we'll see. I don't know, but do the tariff uncertainty, does that on the Ben Franklin close, does that get worth 10 other things, or why has it been so front and center? Well,
you gave a good list, Joe, of things that have been settled. So better or worse, tailwinds. The bill,
antitrust.
The budget is settled. It's behind us. There are positives and negatives in it, but it's settled and it's behind us, and there's certainty there. On the tariff side, there's certainly more certainty than there was in April. We've pulled back a whole bunch of uncertainty into the equation now. But businesses are also, I think, a little calmer about what that's going to bring. You've had several months of tariff revenue of $25 billion, $30 billion. So you're seeing the pricing effect start to work its way through. I don't think it's really yet impacted consumer behavior in a big way, and we still have to worry about the inflationary effect.
Do we?
Well, it's and it may be that along the value chain, different entities eat different pieces, and the consumer only gets so much at the end.
Lodging collapse, all the inflation in that part of it. You got energy prices. I can get under $3 on gas,
and those are all huge positives. I do think the Fed will continue
for inflation,
and I think because of that. But even with those positives, the Fed is going to wait, and I think they should, because the thing that they need to avoid most, they don't want to start to deal with an economy that's hanging in there, cutting rates. And then have inflation come later. They need to avoid that word stagflation, which you and I have to go a long way back to worry about stagflation. So for them, the most important thing is to make sure when they start to move on an economy that's got tailwinds, and you just laid out a whole bunch of them, but some weakness, when they start to move on that, they want to make sure that they're not going to 3-6 months later start to see inflation with more momentum than anybody anticipates now, even though your points are fair.
Well,
so far, the data says it's not there.